Welcome, my dear students, back. Today we are going to take chapter 9, and it's about the inventory. Inventory, Inventory. Inventory means the stock. How I evaluate the stocks based on two ways. How I account for them. The way to account for them is what? So we'll check out now and see what we came for. Let's share the screen and go directly to the example. Then we see what we are talking about. So here we go. Inventory cost valuation. How I will evaluate the price of the cost or the inventory. How I will calculate it. Let's go exactly to the Ashles Auto makes and sells batteries. The batteries for the cars, batteries for whatever. In 2017, it made 100,000 batteries and sold 75,000 of them. So they made 100,000, but they sold actually 775,000 of them. So they sold the three quarters of them at an average selling price of $60 per unit. The following additional information relates to Ashell's Auto for 2017. What's happening here? He gave me the direct material per unit is $20. He gave me the direct manufacturing labor $4. He gave me the variable manufacturing costs $1 per unit, all this per one unit. Then he gave me the sales commission $6 per one unit. That's fine. Then he gave me the fixed for all the units, 750,000 per year. All the fixed costs. We said the fixed costs are the costs like the machinery, equipment, all this. And he gave me administrative expenses like advertising or all, and he said it's all fixed. It's fixed as well, 270,000 per year. He wants me to calculate the inventoriable costs per unit using variable costing and absorption costing. He wants me to use it, the variable costing and the absorption costing. So one method is we have two ways for evaluating the inventory. It's one of them is called the variable costing, and the second one is called the absorption costing. So let's go for first one, the variable cost. The question is so long, but the answer is only one line. The question is so long, and the answer is only one line. Let's go and see. So when we talk about the variable costing, that we will take the direct, all variable manufacturing costing are inventoriable costs, all the variables. So this includes direct materials. So the variables include direct materials, direct manufacturing labor, and variable overhead. So therefore, look at this now. We calculated for the 20 and the 4 and the dollar. Here we go. The $20 per unit, the direct materials, plus the $4 manufacturing labor, plus the variable manufacturing cost of $1 because it's variable. It's already variable. So we could, based on the evaluation of the variable costs for the inventory, we will take all the variable costs only. So we have $20 here, direct, which is variable, and we have also 4 direct manufacturing labors, and we have variable costs of $1. So 20 plus 4 plus 1 will be $25. Look at this. Okay, this is the first thing. How we will calculate under the variable costing, how we can evaluate or evaluate the inventory under the variable costing. Okay, it's $20. Take care, I didn't take the commission, and I didn't talk or consider the fixed manufacturing costs, and I didn't consider the administrative expenses. I only took 1, 2, 3, the direct materials, the direct manufacturing labors, and the variable manufacturing labors. 20 plus 4 plus 1. This will give me all the inventoriable costs will be $24 per unit, of course. Let's say the absorption costing. In the absorption, we have two ways, I said. We have variable costing, the first one, the variable costing way, and the second one, the absorption costing way. And you have to look at the exam and watch out in the quizzes and the assignments. What I will ask you, will I ask you about the variable costing, or will I ask you about the absorption costing, or will I ask you about both of them? So you have to be very worried of this point, or you have to pay attention and read very carefully the question sheet. Absorption costing, considerable variables, manufacturing costs, like this one as well, like this one as well, plus, plus, and all fixed manufacturing costs. Okay, wait a minute. All manufacturing fixed costs. How will I calculate the all manufacturing fixed costs? Yeah, I can calculate it. Look at this. It's here. The fixed manufacturing cost is 750,000 per year. Hey, the 750,000 per year for all the units. Not all the units sold. No, all the units produced. Okay, he produced how many units? He produced 100,000 batteries. He produced 100,000. So I will, the only difference between the variable costing and the absorption costing, that I will add the fixed costing per unit. So I have 750,000, which is fixed cost, divided by 100,000 units, which is produced, not sold, produced. So I produce 100,000 units, so I will get the share of each unit from the fixed costs. I will get the share of each unit from the fixed cost. I will add them to the variable costing, which is 20 and 4 and 1, like the X method, the $25 of the X method. So $20 and 4 and 1, this is $20, and this is $4 and $1. Then still I didn't take the sales commission. In both the ways, I didn't take this. So I didn't consider about the sales commission in both the methods. I didn't put it into account. Absolutely, I didn't put it into account. Again, I didn't put the sales commission into account either with the variable cost valuation or with the absorption costing valuation. In both of them, I didn't consider the commission of sales. So here we go. 20 plus 4 plus 1, 20. Look at this. 20 plus 4 plus 1, that's fine. Plus the share of each unit from the fixed cost. Okay, the fixed cost for all the units is 750,000. You produced 100 units. So how much is the share per unit of the fixed costs? This will be 750,000 divided by 100,000 units. Look at this. The cost, the share of cost for each unit let's say each unit, I have all the units cost me sold, all the units produced cost me $750,000. That's all the units produced. But how many units produced now? They cost me 750,000, all the costs, the fixed costs. So I produced 100,000 batteries, 100,000 units. So how much each unit will cost me? The 3 with the 3, this one with this one. Then each unit will have $7.50. Will have $7.50 because 750,000 divided by 100,000 will give me $7.50 for a unit, per unit, per unit, for a unit, or per unit. Let's write it here, per unit, for a unit. Okay, so this is how it works. I will give in the second way, in the absorption, I will consider the fixed costs. So the difference between the variable evaluation and the absorption evaluation, that in the absorption evaluation, I will add the share of the fixed costs for each units produced. Thank you so much and have a good time. Then we will add, and we'll finish like $20, $4, and $1. Then this will be $7.50. All will come to $32.50. And of course, there is another conclusion, that always the absorption costing is greater than the variable costing. Don't forget this too. The absorption costing is greater than the variable costing method. Thank you so much. You have a great day. Thank you.